What's up, currency traders? It's your boy, Mr. One Mindset here. And in today's video, we're going to talk about what is multiple time frame analysis. And I'm also going to show you how to trade it using supply and demand levels. All right. So let's talk about it. About it. Multiple time frame analysis, is really a powerful technical process that consists of monitoring the same asset but under multiple time frame charts. So traders and investors, get to analyze more than one time frame or more than one chart in order to place their orders. And what they're looking for is to make sure that all of those charts are going in the same direction. All right. The process of analyzing, more than one chart, a lot of times gives investors the confidence and the ability to determine, what direction the long-term trend is going, and also, when to stay away from trades. The problem is a lot of times traders really don't know or can't really determine what direction the overall trend is going. If we utilize, higher time frames and start doing what we call a top-down analysis, you can generally determine what direction the market is going in. The market only moves in three different directions. It's either going up, bull runs, it's either going down, bear runs, or it's moving sideways, which is typically in a channel. Okay, so if we start off with a top-down analysis, not only can we get a bigger picture and an overview of what the market is doing, but as we start to drill down and look at those smaller time frames, we can also filter out, what a lot of traders will call the noise in the markets. So the first thing you want to do is you really want to analyze what type of trader you are. And as I said in one of my other videos, it really depends on your personality. Most people, they are impulsive and they want, instant gratification. So for most people, they might think that they're scalpers, but really they probably won't be successful because greed will play a factor, as well as a lot of other, personality traits. All right. So you really need to determine what type of trader you are. The first type of trader is called a scalper. Scalper is a trader that's, really interested in profiting from small price movements by executing multiple trades per day. This type of trading style requires you to spend all day pretty much looking for short-term opportunities and then trading them. Having a strict management, strategy is definitely a must when you're a scalper, because you execute multiple trades every single day. You got to protect your trading capital from losing more than you've already, specified in your trading plan. Okay. You should definitely take into account, brokers fees and commissions and all of that stuff if you're trading forex. Make sure that, the amount that you're winning is more than what you're losing. A lot of people tend to think that just because, you are trading, that you're not allowed to lose, and that couldn't be further from the truth. But we're going to talk about that in a different video. Okay. As a scalper, a lot of times, I'll take anywhere between 20 to maybe even 50, trades in one particular, day. I mean, there have been times when I've taken over 100 trades in a day, and that was because, I was just really, just being greedy, and I really should have stopped or whatever, once I hit my target, but the market was just giving it up, so I had to take it. All right, but in general, you know, traders typically will trade anywhere between like maybe 20 to 50 trades in a particular session. The next type of trader is what we call a swing trader. Now, a swing trader, will stay in trades anywhere between like, you know, maybe an hour to a few hours to a few days. Okay. And, some people claim that swing trading is less stressful or what have you. But my personal opinion, anytime I'm in the market, is stressful. The market could be going with you in your direction, and in binaries, that you have to choose your time frames up front. You can choose when you enter, you can choose how long you stay in for, but you can't exit that trade any earlier than what you've chosen in terms of a time frame. You can when it comes to forex, but again, you have to really watch the markets and monitor the markets while you're in that trade, just in case if the market starts to go against you, you don't want to give it back all of the profits that you've earned. The last type of trader that we're going to talk about is called a position trader. Now, a position trader will be in a trade from weeks to months. And what they'll just do is they'll just enter into a position and just hold it. Okay. A lot of times, like I like to do this, when it comes to like my 401k. And realistically, that's what you're doing with your 401k. I just like to trade my own um, 401k plan. So, whatever money I would have invested, into a normal 401k, I just call it my retirement fund. But that type of fund, I use like buy and hold strategies. Okay. So again, determine what type of trader fits your personality. Are you a scalper? Are you a swing trader? Or are you a position trader? Just depends on your personality and your lifestyle. So if you're a scalper, you're going to be using uh, the lower time frame charts, the 1 minute charts, the 5 minute charts, and the 15-minute charts. If you're a swing trader, you're probably going to use the 15-minute charts, the 30-minute charts, the 1 hour charts, or maybe even the 4 hour charts. If you're a position trader, you're going to use the larger time frames, typically 4 hour, daily, and monthly charts is what position traders like to use. So now that we've identified the time frames on the charting, now let's take a look at the charts. As you can see, I have 3 charts pulled up. And again, because I'm a scalper, I have the 1 minute chart, I have a 5 minute chart, and I have a 15-minute chart. So the first thing that you want to do is you want to be able to identify your key levels of support and resistance. Okay, so I'm not going to go into detail about exactly what support and resistance levels are. And, you can look up one of my other videos for that. All right. But I'm going to start off with a top down analysis. Okay. So what I'm going to do is I'm going to put lines in for my support levels. And I'm going to start off on my 15-minute chart. And I'm going to start off with the most recent candlesticks, meaning I'm going to start from right to left. Okay. So the lowest level from the right side, reading it back to the left, would be here. All right. And keep in mind that, um, placing support and resistance levels, it's not an exact science. Okay. So that's why we tend to use what we call zones. And zones are areas of support and resistance, not exact price levels. Okay. So for the sake of this video, we're just going to use support lines. All right. So I've placed my line here at 22,023. And I'm going to place a line up here at around 22,110. Okay, so I'm going to kind of duplicate that on my other charts. And I just want to make sure that it makes sense when I'm doing it on my other charts. Just helps me to kind of hone in and really, you know, get it nice and tight. Okay. 22, 110. There we go. Okay, so now I have my areas of, support and resistance pretty much mapped out. And what I'll be able to do now, I can look at my 15-minute chart, and I can see right now we're in an upward pattern. I got green candle on the 5, and green candle on the 1 minute. So I'm pretty much in an upward pattern. So with something like this, I can, make a determination as to whether I want to go with a 30-second, 1 minute, or 2 minute, um, buy option on the trade. Once my trade starts to get up here towards my resistance level, I'm going to watch the the market and just kind of see if it respects these levels and whether it bounces and comes back down. And this might be a good area to place a sell trade once I kind of start getting confirmation that the market is, respecting these resistance levels. What may happen, depending on the strength and volume of, this market, it may push past this resistance level and may continue to go up. And this may become the new support level for the market. All right. But you have to watch and see what happens around that level. What we do know is that, in the past, we've had one, two, and we're getting ready to have a third touch of that resistance level. So that's how we know to just be cautious. I don't want to put in a buy at this level. I want to watch and see what happens to see what the market is going to do. Okay. So, that in a nutshell, if you notice, look at what just happened here. So, it came close, gave us a very close touch, and it kind of, bounced back down. But if you notice how fast that candle formed back down. Okay. So, we'll watch and see what happens because potentially the next few candles may start painting red and start coming back down. We don't know. But because of the momentum of the 15-minute chart, it could very well, break through this ceiling and start creating higher highs and start testing levels up in this area. Okay. So if that happens, I could either, adjust this level of resistance, or I can actually plot a new level of resistance. Okay, so that'll be our resistance 2 level, and that's around 2213. And we can do the same thing here, 2213.7. So as long as they're around similar areas, that'll be our R2. So that way we have an idea of, if this market breaks out of this resistance level, then we have an idea of where the market could potentially be going next. Okay. So this in a nutshell is how you would utilize and take advantage of multiple time frame strategies. And as you can see, it really broke through that resistance level very strongly. All right. So what I would do is I would not take a trade right now. I would wait for a pullback and then a retest of that resistance level going in that direction. Okay. So I don't want to make this video too long, guys, but check out other videos on our YouTube channel. And of course, check out our website, crowntraining.academy, for our courses if you want deeper insight as to how to apply these strategies. All right, because we have a multitude of training content that you are able to purchase if you want to take your knowledge and understanding to a whole nother level. You can definitely apply this strategy not only to Forex, but definitely to binary options, which is where I make the bulk of my money. Okay. Thanks for watching, guys. Look forward to seeing you in the next video.